Hey everyone, in this video I wanted to bring you one Warren Buffett growth stock that's down 34% off its highs that I think you might regret not buying on the dip. Now, before I reveal what that growth stock is, I'm going to talk about some of its financial metrics, and then towards the end of the video I will reveal what that growth stock is. So let's get started and see why Warren Buffett likes this growth stock so much, starting with, of course, revenue growth. And looking at this metric, you could see from January of 2021, where the company had, let's say, around 20 million in revenue, that has jumped all the way up to 1 billion in revenue in its most recent quarter. So phenomenal growth for this company in terms of revenue expansion. Moving on, another metric I like to look at for companies that are growing rapidly is cash flow from operations to sales. What percentage of the company's sales is turning into cash flow from operations? When a company is growing that quickly, are those sales turning into cash, right? Simple thing, but not very many companies actually achieve this feat when they're growing so quickly. They sacrifice cash flow for the sake of sales, but that's not the case for this company. This company's cash flow from operations to sales has increased dramatically over the last couple of years from negative 250% all the way up to a respectable 21.88%. So not only is it growing revenue rapidly, but it's also growing the percentage of those sales that are turning into cash flow. Excellent, excellent characteristics. And I can see why Warren Buffett likes this growth stock so much. And the last financial metric I will look at to highlight why I think Warren Buffett likes this growth stock so much is valuation. Of course, Warren Buffett is the iconic value investor. Value is one of the things Warren Buffett looks at. He doesn't mind buying a growth stock so long as it's selling at a reasonable price. He doesn't want to overpay for growth. Nobody does, but especially not Warren Buffett, being the prudent investor that he is. So, for that reason, I think the value of this growth stock is attractive here. If we look at the forward price to earnings ratio at 28.46, not only is it relatively cheap, looking at its history, it's down significantly. It used to sell at a forward price to earnings around 60 in January of 2022. Now it's down at less than half that price at 28.46. So the relative valuation is cheap, but it's also cheap if you consider the growth of the company. If we look back at the revenue growth, look at how phenomenally fast the revenue has grown over the last couple of years. Typically, when you have companies that are growing revenue this quickly and have very strong cash flow from operations to sales, these are trading at more expensive valuations because not only are they growing revenue, they're growing revenue and generating positive cash flow. That's a rare combination. And when you see companies like that, they are trading expensively. Not this case, not so expensive here. So I can understand why Warren Buffett likes this stock. What is this stock? This is NU Holdings, New Bank, New Holdings, NU, ticker symbol NU. It's a financial services company that operates fintech financial services company that operates mostly in Latin America. And that's another reason why I think Warren Buffett is attracted to this stock. I've certainly been attracted to companies operating in Latin America because that economy, those economies are growing rapidly and transitioning to from legacy to digital rapidly as well. So I'm bullish on that economy and on several stocks in that economy, and this being another one of them. So there you have it. New Holdings, ticker symbol NU, is one Warren Buffett growth stock that I think you might regret not buying at these prices here. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.